Thank you for joining us this morning. Welcome to our webinar on Form 990 Common Questions and Answers, our second not-for-profit webinar of 2022. My name is Terry Taylor. I am a director here at Sikich and part of a larger team that specializes in the not-for-profit industry. Sikich hosts webinars several times a year on topics that are pertinent to the not-for-profit industry. If this is your first time joining us, welcome. Sikich is a professional services firm supporting the not-for-profit organizations through our audit, tax, accounting, advisory, and technology solutions. As you can see in the graphic, we are more than a CPA firm with an award-winning technology practice and a robust advisory practice. Our team serves a variety of not-for-profit organizations, including higher education institutions, social service agencies, healthcare organizations, foundations, and more to help you support your mission. We have team members and clients across the United States and enjoy the opportunity to be able to connect with all of you virtually this morning. Before we begin the webinar, do have a couple of housekeeping items. First, I encourage all of you to use the questions feature. I'll be monitoring the questions and we will have time to cover a few questions at the end of our session today. If your question cannot be addressed during the presentation, we will follow up after the webinar. The slides for today are available for you to download. CPE credits are being offered for this presentation and the polling questions will launch throughout the webinar. The polling questions do need to be answered in order to receive CPE credit for the presentation. At the conclusion of the presentation, a short survey will launch. You also will need to complete this survey for CPE credit. The certificates will be emailed after the program within 2 weeks. So as we begin this morning, let's meet our presenters. I'm happy to introduce my Sikich colleagues and fellow not-for-profit team leaders, Jill Boyle and Bridget Muggy of our not-for-profit tax practice. They have years of experience working alongside not-for-profit organizations to advise on tax planning, consulting, and compliance. You know, I work on the audit side of things, but we commonly get questions about the 990 and are happy to have the opportunity this morning to talk with you on some common questions. And I'll turn it over to Jill.
Thanks, Terry. Good morning, everybody. As Terry mentioned, I'm Jill Boyle, and I am a tax director here at Sikich, and I lead our not-for-profit tax practice. So that means I lead a group of individuals here who are especially trained in, preparing Form 990s. As you know, they're a bit different than most other tax forms. So we do specialize a team here, and I have a couple of managers on that team as well. And you'll meet one of them in a minute. And so we all focus all of our time here. We probably do about 1,000 990s as a firm, and so we look at all of those. So we are the nerds looking at 990s all day, every day. So we are happy to share our knowledge with all of you. As Terry mentioned, please do ask questions. We probably will save them to the end rather than cut into the presentation, but we certainly will try to answer all of those. We formed our agenda today really based on, what do we get the most questions on from our clients? What do we find to be some of the more confusing things on the Form 990? And just, sort of some general basic information that, hopefully if you're an expert in this area, you still might find a couple of tidbits of helpful information. If you're new to looking at that, hopefully we're trying not to go too far over your head and get into the weeds. So hopefully something helpful for everyone here. So the sections we decided to cover here, first of all, the program service accomplishments, just talking about, thinking about who's reading your form and what that says, and then compensation reporting, one of the probably most important, most familiar parts of the form, contribution reporting, which can get a little confusing, fundraising events, same there. And then unrelated business income and Form 990T, I'm going to touch on a really high level. Obviously, that could be a several hours long separate presentation, but for today, we're just going to do a little bit of a high level review there. And then at the end, as I mentioned, we did ask for some pre-submitted questions. So for those of you that sent those, we will address some of those. And then also today, if something comes up, if you want me to repeat something, anything like that, please just put it in the chat and we will monitor that. So now I'm going to turn it over to Bridget, who's going to get us started.
Thank you, Jill. Good morning, everyone. I am Bridget Muggy. I'm a tax manager here at Sikich in our not-for-profit vertical. We do have a lot of information, as Jill mentioned, to cover, so I'm going to go ahead and jump right into our presentation. We're going to start with part 3 of the Form 990, which I have up here. It is a statement of program service accomplishments. You can see on line 1, we have a bit more space than on page 1. If you'd like to kind of expand your mission here, add some more language, location, etc. Line 2 asks if the organization did undertake any significant program services during the year that were not disclosed on a prior Form 990 or 990 EZ. An example here could be if you are an organization that provides housing or shelter. If you open a second location, that's not really what they're looking for here. But if you did start serving food, for example, that would be something that you'd want to disclose to the IRS. Line 3 is, did the organization cease conducting or make significant changes in how it conducts any program service? So circling back to that previous example I just mentioned, if after several years your organization decides that food program's not working out, you'd want to go ahead and disclose that you are discontinuing that program. Question 2 and 3 are important. It starts at statute of limitations with the IRS, puts them on notice if they have any additional questions about programs you are either undertaking or ceasing. Line 4 is the 3 largest programs as measured by expenses. There is the top 3 are kind of listed on this page 2, and any of the overflows go over onto that Schedule O. You really want to use this section to tell your organization's story. You want to have descriptions detailed enough that readers can kind of differentiate your organization from other organizations performing similar work. You could do this by using relevant metrics, numbers served, maybe your location served. You do want to be cautious in using extremely long descriptions. So while everything does flow over to that Schedule O, you probably don't want 15 pages of Schedule O disclosures going into every nuance of your program. So be detailed enough to differentiate yourself, but maybe not so detailed that you end up with a lot of those extra pages. A note here is if you are using the functional expense breakout in your by program in your financial statements, kind of using those same programs here might make sense. So I'm going to keep on with my housing example for this part. And if you have a north and a south location, you might want to just combine those into one for like your housing or your shelter or whatever program you're doing. However, if you do have like a housing and a food, those are 2 separate programs. A little note here about tying to the rest of the return. So 501c3 and C4 organizations are required to add some additional financial information here. Why only these 2 types of organizations? Well, that's because these are the only 2 types of organizations that are required to break out your expenses by function back on that Part 9. So looking at Part 9, you're going to use that second column for program service expenses, which is column B, line 25, which is that total line, and that should match the total of the program services expenses on line 4E of this Part 3. So at the very bottom, there's just a little line that says total. Within that, you want to make sure that you are breaking out your grant expenses. These are expenses, not revenue. So that those first 3 lines on that functional expense page, which is individuals, organizations, and then it does have one for foreign. Those 3, you want to have that total kind of tie. There is not a total at the bottom for that, but our software does give us a diagnostic if those numbers don't match, and we will check that for you. There's also a spot to report revenue by program, and this should tie to Part 8, line 12, which is the total line for column B, which designates your related or exempt function revenue. It is important to note kind of here that those contributions don't fall into that column. So if you're a contribution heavy organization, you may have programs with no revenue listed, and that's perfectly okay.
Okay, so the next highest topic, which I also expected, was compensation reporting. So I'm going to start with that. Something important to think about here is it's all very specific to each individual organization. So there's a lot of different nuances of types of compensation that are paid, and in this job market, we're seeing a lot more of that. So keep that in mind. Your individual organization might have something specialized. We're trying to cover this on a pretty broad base, but hopefully we'll be helpful regardless. So this is Part 7 of the form, this little snip that you're seeing right now. It's Part 7. It's probably the most looked at by our clients, by the public, by whoever really is looking at 990s is probably searching for this section, right? You might be comparing compensation to to keep in your files for your own organization. Others are doing the same. So this really is probably one of the more important parts to get right. And right on the top here, the IRS did list some definitions to be somewhat helpful as far as, where do I start? Who do I list here? And so those definitions are somewhat helpful. We're going to go over those more here, but I wanted to show you that they are there on the top of that section for the reader to hopefully help understand who's there. The other thing I'm going to point out on this, just because we can see the picture, is that as you're looking at your own Form 990, there is an order of reporting that was added in, I think, the 2020 instructions. So the IRS now does want you to list in order of compensation. So any of the people that are required to be listed there with their comp, it wants it in order of that. So you may not, it may not seem logical with which box is checked by their name, but they do want it in order of compensation. So then to get into who are we reporting here, right? So we are reporting any current trustee, director, officer, key employee, and then in addition to that, any other 5 highest compensated employees. We are going to go over those definitions. They are all defined by the IRS in pretty good detail, actually. So we're going to go over that. Those of us that work in this area call them Tadokis. You do not need to use that reference, but in case I say it, that's the reference we use to sort of list all of those people. And what are we reporting here, right? So this is one of the confusing sections. It is on a calendar year. It is always, Part 7 is always a calendar year, regardless of the fiscal year of your filing organization. And it is a calendar year because the IRS theoretically could go and match a W-2 or 1099 to what is being reported here. I don't believe their systems are anywhere close to advanced enough to do such thing, but that is why the form was designed that way, and it makes some sense. So that is why this is always on a calendar year, because it would be able to be matched to another IRS filing. So again, for the fiscal year filings, that would be always the calendar year falling within. So 6/30 as an example, 6/30 year end, you're going to use the year prior, the 12/31 calendar. So getting into some of these some of these definitions, we did note on here, we are taking these directly from the Form 990 instructions. We're going to read through them today just to be helpful, but I do want to note that these are all available. The 990 instructions are actually a pretty decent resource. And I'm not just saying that as, again, a nerd who does this all day. They actually are written in pretty plain language, and so they are really helpful. And I would say especially the glossary section. So if you even just Google IRS Form 990 instructions, there's a glossary section that helps with a lot of this. So anything you see bolded is going to be in the glossary. So starting with officers, unless otherwise provided for a couple different sections where you'll see officers show up, it's the person elected or appointed to manage the daily operations at any time during the tax year. So president, vice president, secretary, treasurer, in some cases, I think most cases, board chair. What determines this really is the bylaws or any of the legal documents that form the organization. And a lot of that also is determined by state law. So some states may require that an organization show 5 officers. Some of them may show 3. So all of this is ultimately determined by those documents. The piece here that I highlighted that I think is almost most important is for purposes of the 990. So this is just an IRS added definition, nothing to do with your legal documents. The organization's top management official and top financial official are always officers, regardless of compensation. So the definitions here of those 2 positions are important. So the top management official kind of makes sense. It's right. They have ultimate responsibility for implementing the decisions of the board. They supervise the management, administration, operation of the organization. So I think a while back, this probably was always an executive director. I think we've sort of started changing titles. So it could be president, CEO. So sort of, again, that top management official, I think it makes sense who they're targeting here. And again, this is regardless of the amount of compensation. There is no amount here that would exclude someone from being reported if they are this top person. The second, and these again are officers by IRS definition. Top financial officials. So the person who has the ultimate responsibility for managing the finances it could be a treasurer or like a CFO, again, VP of finance. There's a lot of different titles we might use here, but it's important to think about who has that duty, not necessarily what their title might be. And a side note here would just be that this could be the same person for some organizations, particularly in smaller organizations. I see that the executive director really might have this ultimate financial and management duty, and that's okay. But for larger organizations, it's typically not the case. So then we would see 2 people listed for these officers by definition. So director or trustee, which is one of the other boxes, right? So I'm kind of going through the different boxes you could check as to who gets included here. So director or trustee, it's a member of the governing body, the board of directors, at any time during the tax year. So that's a key part of the definition. So anytime, sometimes we get fiscal year organizations that maybe change boards during the year. Because of that, you may end up showing sort of 2 different boards, and then you can disclose that, you know, somebody rolled off as of this date, someone began on this date. It gets a little bit confusing to report, but we can usually add some disclosure there that makes it a bit more clear. So again, anytime during the tax year, but only if they have voting rights. That's the other piece of this that's really important. So if you have an advisory board or some sort of, you know, long-term membership of maybe ex-board members, an honorary board, something like that, if they don't have a vote, in the note here, you'll see if they don't have a vote, they don't need to be listed here. So this is literally only asking about who would show up to a board meeting and have a specific vote. I will note, we have a couple of organizations that have a really strong preference that they list some additional people. We could probably add some disclosures to make that more clear. But again, just so we understand, the actual rule is that if they don't vote, they would not be listed here. Okay, key employee. This one comes up a lot. And I think this is probably one of the more confusing terms that the IRS could have chosen for this classification. So key employee, I have a lot of organizations that say, especially right now in this job market, all of my employees are key employees. So I'm going to give you a list of all of my key people because I have a lot of them, right? So I understand that definition. However, the IRS chose something different for this. So it's an employee of the organization other than officer, director, trustee. And they have to meet 3 really important tests in order to be this. The top one being they have to have $150,000 of reportable compensation or more. So that one typically takes a lot of those people off the table in many organizations, right? So the 150,000 is probably that first hurdle that a lot don't meet. If they do meet that, there's still 2 other tests they have to meet. I'm not going to go into them in a lot of detail, but it would be a responsibility test, meaning they have to manage a certain % of the operations of the organization and a certain percentage of the budget. And then also they have to be one of the top 20 highest paid. So those 2, again, I don't see as often. So typically if they pass that first test, we then would ask some follow-up questions on the second 2. And again, just a note here, the tests are explained really well in the 990 instructions that can help. Otherwise, obviously, we're here to help sort of go through those steps as well. Highest compensated employees. So this is where you end up sort of reporting a few more people than you maybe thought you were going to at the beginning. So it's one of the 5 highest compensated employees. Included disregarded entities. We may have some situations where you would have that, other than the current officers, directors, trustees, key employees, who have reportable compensation of over $100,000. So we do see a lot more of this showing up, and again, especially inflation, things like that, we're probably creeping up for some more organizations to have more reporting here. And again, this is tested on the calendar year that falls within. And so these individuals do get listed in Part 7. And it's only if they don't fall in one of the other categories and they're paid over $100,000. So we are, again, using box 5 from the W-2. And again, after those other people are identified, if you still have more people that are over 100,000, the top 5 get listed here. The one thing I want to note, we were just recently at a conference, and something they mentioned was, you know, this is one of those where those people may not expect to be reported on your 990. So if you are an organization that has those people listed, it is probably in your best interest to let them know before their neighbor finds their compensation online and mentions something to them. So just a good note to keep in your mind if you're listing these people, and really this would go for anyone, not just your highest compensated. If you're listing anyone on here, to kind of let them know, hey, this is maybe one of those downfalls of working in this area, but unfortunately your compensation is going to be public. Then getting into a couple other definitions, former is another one that we do see some confusion with, because someone will say, well, they retired during the year, so they're now former. It really is, you're only going to check it if it was someone who was listed on one of the prior 990s in the 5 prior years as an officer, director, trustee, or key employee. So you'll notice here the highest compensated doesn't get brought back into here. And they have to have received reportable compensation either as $100,000 for officers and employees, or $10,000 for directors or trustees who were paid for their services as a former director or trustee. Now, we don't often see a lot of boards paying their members, so that their board, they typically volunteer board members. If they're paid, that we just don't see a lot of that, but that's a $10,000 threshold. The next slide is a note here that says, don't check this if they were a current officer, director, trustee anytime during the current tax year, or a current key employee, or the 5 highest compensated, because remember, that's determined on a calendar year. So this really gives you a whole lot of reasons to actually bring them back into being a current. So with a former box, I really don't see it checked that often. The only time maybe, in a retirement situation where they're on some sort of like a severance payout or some type of longer term payout. And again, it would be over that 100,000 threshold. So that's really the only time that I see this used. All right, and I'm going to turn it back over to Bridget to talk a little bit more in detail about what numbers are showing up here.
Thank you, Jill. So once we figure out who we need to report, we need to figure out what we need to report. So we're going to start with reportable compensation. For Part 7, column D, that's where you're going to report the reportable compensation. This is generally box 1 or 5 of the W-2. You use the higher number. It's almost always box 5. You might have a situation where you need to pick up compensation from a 1099 NEC or a 1099 miscellaneous. These are kind of instances where you perhaps do have paid board members. They might get reported on 1099 instead of like a W-2. If you're reporting reportable compensation for a related organization, that is going in column E instead of column D. Same qualifications for the numbers. If you move kind of over into that last column, you're going to be reporting other compensation. In that column, the most common types are the non-taxable health benefits, which is generally that employer paid portion. And then you're going to you might have that employer paid retirement match. You want to be careful that you're not including any numbers that may have been included in that W-2 box 5. So if I have a deferral to my 401k, I'm being taxed on that in box 5. I'm not going to double report that as the total amount that you paid as an organization into the retirement fund. As Jill mentioned, the 990 instructions are really actually good for this section of the return. Pages 33 through 35 provide a really comprehensive chart of the different types of compensation and where those get reported in this section. So if you have any additional benefits, such as maybe tuition reimbursement or dependent care benefits, you can kind of look at that chart and it will tell you exactly which column you should be reporting that information in. I do want to note that this is calendar year information. So if you are a fiscal year filer, you will kind of have a discrepancy between this page and that functional expense reporting later on. That's totally fine. That's totally normal. If your numbers do match in your fiscal year filer, one of those 2 sets of numbers is probably incorrect. Unless you just never have raises or your health insurance doesn't go up or anything like that. I do want to mention also that this is more detailed information, as you may have picked up on, than maybe you've provided for your audit or for your review. So kind of just keep that in mind as you're gathering your information for your 990, that you probably do need to have this by individual, those individuals that Jill identified for you just a few minutes ago. So now that we figured out who we're reporting and what we're reporting, we're done, right? Well, no, you're not done quite yet. You may have some Schedule J reporting requirements as well. So for Schedule J, you're required to report anyone whose total compensation from either the organization or the related organization is over $150,000. So this is going to include both that reportable compensation column plus that other compensation column that we just went over. Here is a section of that. If you're a current Sikich client, this probably looks really familiar, as our client request list is modeled after this, and these are basically the columns that you're going to see when we request compensation information. So for each individual, you can see there are two lines. That small I line is for compensation from the organization, while the II line is for compensation from a related organization. So you're probably either going to be on one line or the other, although you may have a situation where, you know, part is paid from one organization and part is paid from another organization, so you have to split those out. The amounts here are basically an expansion of the amounts reported in Part 7, and the totals are kind of going to tie back to that section. So Schedule J, also calendar year basis. So column B splits out that box 5 compensation between base compensation, bonus and incentive compensation, and other reportable compensation, which may be severance payments or possibly a vacation accrual payout if somebody kind of left during the year. Column C is for those retirement and deferred compensation amounts. Again, that employer match going into a retirement account. And then column D is where all those other non-taxable benefits get grouped together, such as that employer paid health insurance portion. Column E is just a total column, and then column F is used to report any amounts that were previously reported in column C as deferred compensation, but for whatever reason, they are now taxable on the W-2. So you want to make sure that you're not reporting it in column C in 1 year, and then it becomes taxable, and then you have to report it on the W-2. So we kind of have that column for an adjustment column. It's generally reserved for 457B retirement plans. So if you don't have one like that, you're probably not going to run into this situation. There is a Part 1 for Schedule J that has various questions regarding compensation and how it's determined. And you just want to make sure that you review those each year. There is a question about severance payments, I will point out. So that's one that might change from year to year. It's really just questions on how you go ahead and figure out your compensation for the employees being reported in this Part 2 section. I'm going to take a minute here and talk about management company compensation. I'm not going to spend a bunch of time here, but I do want to touch on it really quick. For any organizations using a management company to pay compensation, Announcement 2021-18 has come out, revoking Announcement 2001-33, which was a safe harbor if you were using a compensation through a management company. Neither of those announcements really changed the actual reporting requirements. I listed them here in case you as well are a tax nerd and you wanted to go read those announcements. I know myself, I've read them, I know Jill's read them, but it doesn't really change the instructions. It does say, starting with Form 2022, form years, so the ones with the 2022 up in that corner, you're going to have to report the management compensation according to the Form 990 instructions. So if you don't use a management company, feel free to ignore everything I just said. But if you do, I want to make you aware so that you can go ahead and make sure you're gathering that information on the front end for when 990 time rolls around.
Okay, so now that I'm not going to spend too much time talking about fundraising events, but now that we're back to hosting them, we will have to report them again. I think we had a couple-year break there where most people weren't having any special events. So now that we'll see those come back around, we're going to talk it's a little bit of a confusing reporting, so we just wanted to go through it really briefly. So Schedule G, Part 2 must be completed. So Schedule G is the fundraising event detail, where there's a trigger question on the core Form 990 that says, did they report more than $15,000 of total fundraising event gross income on Part 8, which is the statement of revenue? If yes, complete Schedule G. So that's how we get to report Schedule G. So just to show you a picture of kind of what the statement of revenue looks like, because this is where the reporting gets a little bit confusing for fundraising events. So you'll see down in line 8 is where the detail of your total gross income from fundraising events is shown. I will say if you do have audited financials, we really typically would like to tie that to what might be reported on the financial statements as far as your gross revenue from special events. It may not be material in some organizations, so it may not be spelled out, but if it is, we do like to tie. So you'll see it lists the gross revenue, but then it says except for the contribution revenue, which gets actually reclassed up to line 1C. Because the IRS wants to capture your total contributions coming in as an organization, they want you to reclass that piece of fundraising event revenue. This can get a little bit confusing, but I'll show you a little bit further in the future slides. But I wanted to sort of point out that this is where, you know, it wants on line 8 all of your fundraising and then your expenses as well to sort of show your net. And it gets confusing because we pull out a large number to pull up to line 1. So it does want on Schedule G, list your 2 events by revenues separately stated, the first 2 that are the biggest, and the others can be grouped together. So it actually does say here that if you have events that are under $5,000, you're not required to list them anywhere on Schedule G. I would say as a practice here, we do generally include them just because then our total fundraising that we report on the page we were just looking at, the statement of revenue, actually then ties over to Schedule G. So we will often do that for our clients. So the gross receipts piece is where I was talking about it getting a little bit confusing because you are reclassing that contribution piece. So you really want to tie this out to, you know, what's being reported on the receipt that you're giving to your donors. So, you know, thank you for attending our golf outing. You know, of your $100 registration, $75 is, I guess I would say the opposite, maybe 25% is your tax deductible portion, and 75 is, you know, your cost of the event. So if you have events like that, make sure you are disclosing that piece. And then when you look back to prepare your 990, the piece of that obviously would be the $25 of everybody's registration that would be included in that contribution line. And then once we do that and we pull out that amount, and then we add some expenses in, it is actually pretty typical that our fundraising events are going to actually show a net loss. It's often correct, but I get this question a lot, right? Like, I don't want to show that my fundraising events lose money. This doesn't make any sense. Thank you, IRS, for making this reporting, I think, very confusing. So the net loss, I don't think we would ever be, you know, I know, I'd hope nobody would ever make that comment because most organizations really are showing it that way. So this is just the part 2 of Schedule G as I was talking about. You're going to list out your 2 largest events. The others get grouped together. It, again, would tie to your audited financial statements, hopefully. And then the bottom part, you would list out if your expenses fall into any of those special categories. Otherwise, just list them all as direct. And then I think we're turning back over to Bridget.
Thank you, Jill. Yeah, I'm going to quickly go over some of the contribution revenue reporting requirements. This is Schedules B and N. They're used to report details on the contribution revenue received. Both schedules are determined based off of the contribution reporting on Part 8 of the Form 990. So Schedule B is any amount that's included in that contributions is subject to be reported on Schedule B. This does include government grants and those fundraising contributions that just got reclassified that Jill talked about. You are required to report on the same basis as your 990. So if you are using donor software that perhaps has a different basis, you just want to make sure that you're reviewing that information and adding any details that you need to add when you're gathering your Schedule B information for the year. Schedule M is required if that Part 8 line G is greater than $25,000. And I do want to note that all in-kind donations are required to be reported on Schedule B as well if they are over the reporting threshold. So that's something else to keep in mind when you're compiling your donor information for the year. So if you had publicly traded securities, or maybe you had a bunch of t-shirts donated for a 5K that you put on, those contributions should be included and reported on Schedule B as well. It is important to note here that in-kind services and rents, so maybe you had some donated advertising or somebody let you use their office space, they are excluded from reporting on both of these forms since they are not included on the reporting of Part 8 on the Form 990. And this is really a common reconciling item between the financial statements and the Form 990. Here's a little snip of that part 8 that I was just referencing. You'll see that line 1G is those non-cash contributions. And then 1H is that total that takes into account all those other categories. This snip here is the bottom of Schedule B. Most organizations will use either that general rule, which is any contributor who contributed over $5,000 or more during the year, or they'll use that first special rule, which is for 501c3 organizations who meet that 33 1/3 publicly supported test, which is generally those contribution heavy organizations, and they can use the greater of $5,000 or contributors over 2% of the contributions for the year of that line 1H amount. So if you have a large amount of contributions, utilizing this rule can really cut down on the number of contributors that you list in Part 1 of Schedule B. As an organization that has $1 million in contributors would only have to report those over $20,000 using that 2% rule. This slide shows that Part 1 and Part 2, which is going to be that detail, that Schedule B detail. Part 1, column B, is going to show the contributor's name and address. Column C shows that total contributions for the year. And column D discloses the type of contribution that it is. Note, person does include corporations and other types of organizations, and it does not simply refer to just like an individual. Several things to note here. Anonymous donations. You most likely do not have what the IRS would consider an anonymous donation. If you do know the donor, you need to disclose the donor, even if they've requested to remain anonymous in your marketing materials. Column B is listed as NA for public inspection purposes, and the donor's name and addresses are only supplied to the IRS and your tax preparer. So somebody gives you $1 million donation and they want to remain anonymous, we do need to report that to the IRS. My guess is you issued them a donor acknowledgement letter, so you do have their name and address. The IRS really doesn't like to see anything anonymous here. Truly anonymous donations, if you received a bag of cash on your front step, that could be really anonymous. Congratulations if you received over $5,000 in cash on your front step. I've never come across that situation. The only anonymous donations that I've seen or heard of are really donations coming from a bank or a brokerage firm where the donor is not disclosed. It's just coming from the bank. And in that case, we probably want to report it as anonymous - bank name and address. Also, for donor advised funds, you report that as coming from a donor advised fund. So if you have several donors from, Fidelity Investments, they would all get grouped together and it would just be Fidelity Investments. And that's how we're going to report it for the time being. There is a bunch of legislation out there. However, it's from 2017 and it has not moved yet. So we're going to go ahead and keep reporting this donor advised funds as one group for now. If you look at this second part is the detail for the non-cash property donations. You need to supply a description of the property, the fair market value, and the date received. While you do need to provide a description of the property, the detail for this section is not redacted. So just kind of be aware of that if you receive something that could give away the donor, if you say what it is. So if you received stock in a closely held business, if you don't want to say ABC Family Company. You can just say closely held business stock. The IRS website and the charity watchdog websites, such as GuideStar and ProPublica, do completely eliminate the Schedule B when you get online and you look up an organization. So that's just another thing kind of to be aware of there. Schedule N, this schedule has 24 predefined categories with a few additional lines for other description. If you're getting that taxidermy, you can report that on line 21. I don't know why that's a specified category, but it is. Line 29 is the number of Form 8283s that the organization has completed Part 5 for, so that donate acknowledgement section. You want to disclose how many of those that you filled out during the year. Line 31 asks if you have a gift acceptance policy that requires review of non-standard contributions. If your organization doesn't have one of these policies in place, I would recommend kind of getting one as a best practice, as we have had several questions and increasing frequency come up, especially around cryptocurrency. And it's always good to kind of have one of those policies in place on the front end. Line 32A asks if you use a third party to solicit, process, or sell non-cash contributions. A note on this is if the only third party that you're using is a brokerage firm to sell publicly traded securities, then you can go ahead and answer this question as a no. But if you're using any other third party agreement, you want to go ahead and mark that yes and just disclose the agreement in the part 2 of the Schedule N.
One thing I wanted to talk about before I get into unrelated business income, a question that came up that was pre-submitted a couple of times, just asking about, IRS audits and things like that. I will say, obviously, with their underfunding and lack of resources, the number of IRS audits is not as high as we might expect, but we don't really know that information, and they obviously keep that a little bit, private on purpose. A couple things that they've talked about that may trigger audits that I just wanted to mention as an answer to that question was compliance strategies. So they have some compliance strategies built into their systems as far as, what answers are provided on the filed 990s and certain things that might trigger something to them. I suspect there's parts of the governance section that might be there, but again, we don't really know what that is. It might be a large number of unrelated business income, which I'm going to talk about in a minute. The other thing is referrals, right? So the organizations can definitely be referred by someone who thinks they're suspect of, fraud or doing something incorrect by the IRS's terms. So they definitely do get referrals that they act on. And the other would be amended returns. So we definitely have heard that filing an amended 990 can be something that triggers an audit. So we typically would recommend, avoiding that unless really needed, depending on what the amendment was for. So those are kind of some of the things we've heard of. So then quickly getting into unrelated business income, I'm not going to spend a ton of time here. The one thing I'll mention is almost every circumstance is it depends. Let's have a conversation, right? So just to really briefly touch on how you can sort of help start the conversation. So do I have unrelated business income? There are 3 pieces here that would make that revenue stream potentially taxable. First of all, it has to be unrelated. So just literally taking that term and saying, is this unrelated to my mission? The IRS will say it has to contribute importantly to be considered related, and it has to have a causal and important relationship to your mission. As you can see, there's a ton of gray area there, but this is typically what I see organizations using as their reason that something is not taxable. So always considering this, pull this slide up as you're having these conversations. Is it a trade or business? Are we doing this particular revenue stream to make money? Do I have a business plan that says I'm going to eventually make a profit in this thing that I'm doing? And then lastly, is it regularly carried on? Do I hold it once a year? That's typically, no, it's not. But do I do it maybe seasonally? It could be regularly carried on, but certainly if you're doing it once a week, something like that throughout the year, that definitely fits that area. So then just going the next slide shows a few exclusions from this. So there are a few things that are specifically excluded. You can take them off the table right away, right? So interest, dividends, royalties that are passive in nature, capital gains, and then rent for real property unless it's debt financed. If there's debt financed rent, we may need to have a conversation, but certainly just, renting maybe some land that was donated to your organization. If it's just the real property that you're renting, there would be no concern there. So that list is just kind of the simple excluded items. The others would be if it's all volunteer labor doing something. We do see this come up pretty frequently. The other would be for, we only host this coffee in our lobby because it's for the convenience of our members, our students, our patients, our employees, something like that. So that convenience exception is there as well. The last would be sale of donated items. So if your organization has a thrift store where everything is donated, it often may be ran by volunteers as well. So you have like a double exception for that type. Lastly, I just want to cover a few quick misconceptions that we hear a lot in this area. So unrelated income is a bad thing. We should avoid it. I don't agree. I think it's okay to have some. You certainly don't want to have, half of your organization's revenues be taxable. That might be a red flag for the IRS. But certainly if you have it and we report it properly, it's not a bad thing. It could help you diversify revenue streams and make some money. The biggest thing here is it doesn't matter how you use the money, it's how it was earned. So you have to look at, how did I earn this money? What was that revenue stream? How was it earned. That's how you go through those tests of is it unrelated. And then again, this is not a black and white determination. My answer almost every time, which Terry can probably appreciate, is it depends. We should probably get on the phone, right? So it's never an easy determination, but if you're one of those simple exceptions, that may be an easier one. Okay, so we are at time now where we'd like to cover some questions. So I did go through that a little quickly so we can get to questions. So Terry, do you have a few questions that you want us to address in our last 10 minutes or so here?
Yes, we do have some questions that have come in. So going back to the Todoki with the officers, working on my lingo for the 990 here. How do we know who to list as officers on the 990? For example, we have a lot of vice presidents. Do we include all of them on there?
Bridget, do you want to take that one?
Yeah, I can take this one. As Jill kind of mentioned, you need to go back to your bylaws for the ultimate answer. You might have a situation, where a vice president of finance would be considered your top financial officer. Situations like that, if they have voting rights on your board, they need to be listed. If they're not an officer, they may be included in one of the other categories. They could end up as a key employee or highest compensated employee. You might have a situation where it's policy to report all vice presidents, but that is not required. Again, Jill went over the requirements. Some people do go above that. There is, if you want to over-report, then you can over-report. And then you do want to make sure, as Jill mentioned, it's really important to tell people if their compensation is being listed, since the 990 is public information. Jill made the comment about the neighbor. I do know a woman who goes and looks at her ex-husband's 990 every year to decide if she needs to go in for a child support modification. So you don't want to be listing anyone in, that type of situation unless they are aware that their salary is kind of being disclosed. You could have an angry employee on your hands if something like that were to happen.
Thanks, Bridget. To build off of a comment on there about the posting online, and that was mentioned during the webinar. So the 990s are posted online. It's one question would be, where do we find them? And secondly, if the 990 is getting posted online at some of these sites, do we need to post it on our website as well?
Yeah, I can take that one. So the resource that we typically use, I know most people have heard of GuideStar. That is certainly an option. They did put in some limits. So for us nerds who are looking at 990s all the time, we sort of switched to a different provider, but GuideStar is certainly still one. ProPublica. So if you go search for ProPublica, tax exempt, they do list them there, and they actually have more years from the prior listed. So they just have a bit more information. We use ProPublica for that. The IRS website actually is now starting to also have Form 990s on their site. So there's a ton of places to find them. They're becoming more and more available. As far as listing on your website, I would say that's a preference of your organization. Some would say that really helps us say that we're transparent, right? Because we put it on our website. So I would never recommend against it. It's really just a preference item. There is a question on your 990 that's going to ask how you make it available. So just make sure we're answering that properly. But I would say that, I don't know if I recommend it or not. It's really just an organization preference.
All right, thank you. Next question we have is, are there any form updates that we need to be aware of with the 990?
Yeah, I can take that. So really the Form 990 itself has not changed much in the last few years. They've updated some terms just for other changes in the rules. I mentioned the order of reporting of compensation. So really minor changes on the 990 itself, and I don't really expect major changes there. Again, with the underfunded IRS that can't even answer their phone, I don't suspect a whole lot of form changes there. The Form 990T, I will say, has been kind of rearranged the last few years. They kind of called it the chameleon form at our last conference that we went to. So what happened was they implemented some new rules there about siloing. So each of your activities that are unrelated business income have to be calculated as one silo, to be basic with that rule. But because of that, they had to reorder the 990 and sort of give you places to provide more of that information. So because of those rules, it really has changed quite a bit in the last couple of years. I think now it makes a lot more sense than the first couple of years we had to sort of struggle through that. So I think now the 2021 form looks pretty good. The other thing is 990s and 990Ts are all required to be e-filed now. So hopefully that is not news to you. If it is, there are some, you know, if you're preparing your own returns, there are some websites from the IRS that show you some providers that work for them for e-filing. Obviously, if we are doing that, we've been pushing to e-file for a long time. So.
All right. Sounds good. Next question. What does it mean to be independent as a board member? Can you give us a little bit more information on that?
Yeah, Bridget, you want to take that one?
Okay. Yeah, I can take that one. There are a few things here that kind of go into being an independent board member. First of all, they cannot be paid by the organization in any capacity for the services as an officer. So if you're paying, you know, your board members, that could, you know, get rid of their independence. They cannot be compensated more than $10,000 during the year from the organization, either as an employee or an independent contractor. A couple other things is they can't have any them themselves or a family member have a Schedule L reporting requirement. So, you know, if the husband of the CEO sits on the board, he's not considered independent because the CEO is probably making more than that $10,000, which would trigger kind of that Schedule L requirement. A couple other things is some possible, you know, business transactions could get you on there. If a board member loans money to the organization, they're no longer considered independent because those would trigger some of those Schedule L reporting requirements. But the most common one is the compensation piece.
Yeah, and I would add, I mean, we typically would recommend that you have most of your board members be independent, if not all. There certainly are circumstances where they're not all, but again, we would recommend having, you know, most of them be.
Yeah, and some states do require a certain number of independent board members. So if you're operating in one of those states, kind of keep that in mind as well.
So we are nearing the bottom of the hour, so we'll do one more question. We do have some questions that we did not have an opportunity to get to this morning. We will be following up on those questions and ensuring that they do get answered. So if we did not cover your question during the presentation, we will follow up afterwards and answer that question. Last question, I think that this one might be a common one. As a board member, what parts of the 990 do I really need to look at? What should I be paying attention to when it gets, you know, emailed out to me, because we, you know, want to make sure that we are properly checking that box that the board members are getting the form before it is filed?
Yeah, I can comment on that. I think the parts that you probably pay least attention to, quite frankly, unless you are a CPA and really want to pay attention to the numbers, are those parts with all of the numbers. We've been through that as a preparer side. The organization, CFO, CEO, they've probably been through that as well. We're following audited numbers. So a lot of times the numbers piece of it should, you know, it should make sense. It should seem right. I wouldn't dig into it. Part 6 of the form that we did not go over specifically is the governance section. I would definitely pay attention to that. So there's going to be a list of kind of a bunch of different policies that say, yes, do we have a conflict of interest policy? Do we, you know, review the compensation of the CEO, executive director? Make sure that those are answered appropriately, and hopefully, yes. A lot of those policies should be in place. They're best practice. That's why they're on the form. A lot of them also require a description, and the description is going to carry over into Schedule O. So I would encourage you to go read the descriptions as well. Make sure that the policy that you're saying and how you follow it is actually what's happening in your board meetings. So make sure those two things make sense. The other would be just reviewing the program service piece that Bridget started with, just to say, does this adequately represent our programs? If I'm just reading this, does this really sell our organization? You know, does this make sense? Is it good wording? Things like that. So, and then of course the compensation page, make sure you're on it as a board member, make sure your name's spelled right. Those are things that we can't always catch. So those types of little things are important to each individual member that they should probably look at.
All right. Well, thank you, Jill and Bridget, for your insights. We really appreciate your knowledge on the topic. A couple of final remarks as we close today. A short survey will be launching. You will need to complete the evaluation for the CPE credit, and those certificates will be emailed after the program within 2 weeks. This does conclude our discussion for today. Please don't hesitate to reach out to us for any further questions or conversations, whether it be on this topic or something else within within the not-for-profit area or services overall with that we can help you with. And thank you all for joining. Hope you have a wonderful day.